The UK government gives every single adult in this country a gift worth up to £20,000 every single year. It is completely tax-free. It is completely legal. And the vast majority of people in the UK are either not using it at all or not using it correctly. It is called a Stocks and Shares ISA, and in the next few minutes I am going to explain exactly what it is, how it works, and how to open one today, even if you have never invested a single penny before. No jargon, no complicated finance language. Just a clear, honest guide for anyone on a regular UK salary who wants their money to actually grow. And I need to mention this up front. The current tax year ends on the 5th of April 2026. That means you have a limited window to use this year's allowance. Once it is gone forever. Let us get into it. An ISA is simply a wrapper that protects your investments from the taxman. Think of it as a legal shield for your money. Usually, when you make a profit on shares or receive dividends, the government takes a cut through capital gains or dividend tax. Inside a Stocks and Shares ISA, you keep every single penny of that profit. Over decades, this can result in life-changing sums of money. You can invest in global stock markets, big tech companies, or diversified index funds that spread your risk across the entire world economy. Now, you might be wondering about the risk. Unlike a cash ISA, the value of your investments can go down as well as up. However, for those with a long-term mindset, the stock market has historically provided much better returns than a standard bank savings account. Getting started is incredibly simple. Many UK investment platforms allow you to open an account in minutes with just a small monthly deposit. You do not need to be a professional trader. You just need the discipline to start and let the power of compounding do the work. Keep that £20,000 limit in mind. It resets every April, and any unused portion of the allowance is lost forever. Research a reputable provider today and take control of your financial future before the upcoming deadline. Let's build your wealth together. What is a Stocks and Shares ISA? Let me start with the basics, because this is where most people get confused. An ISA stands for Individual Savings Account, but a Stocks and Shares ISA is not a savings account in the traditional sense. It is an investment account. Everything inside it is completely protected from UK tax. Any profit you make when your investments go up in value is free from capital gains tax. Any dividends or income your investments pay out are free from income tax. Completely, legally forever, as long as the money stays inside the ISA. Think of the ISA as a wrapper, a protective shield around your investments. The investments inside can be anything from index funds to individual shares to bonds. But because they sit inside this EA wrapper, HMRC cannot touch the returns. Compare this to a regular investment account outside an ISA. If your investments grow by £10,000, you could owe hundreds in capital gains tax. Inside an ISA, that same £10,000 growth is entirely yours to keep. For the 2025 to 2026 tax year, which ends on the 5th of April 2026, you can put up to £20,000 into ISAs. This allowance resets every single tax year, and crucially, if you do not use it, you lose it. It cannot be carried over. This is the single most powerful tax advantage available to ordinary UK investors, and it is completely free to use. Types of ISA. There are 4 main types of ISA in the UK. I will explain each one briefly, then focus on the stocks and shares ISA for the rest of this video. Cash ISA. This is simply a savings account with tax-free interest. Good for emergency funds and short-term savings. Currently pays around 4 to 5% interest. Important. From April 2027, the cash ISA limit will reduce to £12,000 per year. Stocks and shares ISA. This is what we are focusing on today. An investment account protected from tax. Best for medium to long-term wealth building, 5 years or more. Lifetime ISA. For buying your first home or retirement. You can put in up to £4,000 per year. The government adds a 25% bonus, up to £1,000 free per year, but there are strict withdrawal rules. Innovative Finance ISA for peer-to-peer lending. Higher risk. Not recommended for beginners. For most people on a regular UK salary looking to build wealth over time, the stocks and shares ISA is the right choice. It is where your money has the best chance of genuinely growing. One important rule: your total contributions across all ISA types cannot exceed £20,000 per tax year. But you can split the allowance between different ISA types if you choose. Why not just use a savings account? This is the question I hear most often. My savings account pays 4.5%. Why do I need to invest? The answer is compound growth over time, and the difference is genuinely dramatic. Let us look at the numbers. Imagine you invest £400 per month. That is roughly the 20% savings target on an average UK salary. In a savings account at 4.5% after 15 years, you would have approximately £97,000. In a stocks and shares ASE invested in a global index fund, which has averaged around 10% per year over the last 30 years. After 15 years, you would have approximately £165,000. That difference, £68,000, is the cost of keeping your long-term savings in a cash account. Now, I want to be very clear here. Investing comes with risk. The value of your investments can go down as well as up. You could get back less than you put in. A savings account guarantees your capital. An ISA does not. This is why financial guidance in the UK suggests only investing money you will not need for at least 5 years, and keeping 3 to 6 months of expenses in an easy access savings account, first as your emergency fund. The stocks and shares ISA is not a replacement for savings. It is what you use once your emergency fund is in place, for money you want to grow over the long term. What to invest in? This is where most beginners feel overwhelmed. What do I actually invest in? Which shares do I buy? The honest answer for the vast majority of beginners is that you do not need to pick individual shares at all. In fact, for most people, trying to pick individual stocks is likely to produce worse results than the simple alternative I am about to explain. That alternative is called an index fund, and it is the foundation of how most financial experts suggest beginners should invest. An index fund is a single investment that automatically tracks the performance of a large collection of companies. For example, the FTSE All-World Index Fund tracks thousands of the world's largest companies across dozens of countries, all in one investment. When you invest in a global index fund, You are essentially buying a tiny piece of thousands of companies at once. Apple, Microsoft, Amazon, HEC, Shell, Toyota, thousands more, all in one simple purchase. The key advantages for beginners: instant diversification. If one company does badly, it barely affects your overall investment. Low fees. Index funds charge as little as 0.1 to 0.2% per year, far less than actively managed funds. Proven long-term performance. Global index funds have averaged around 10% per year over 30 years. Completely passive. You invest and leave it. No stock picking, no daily monitoring required. For UK investors, the two most recommended beginner index funds are Vanguard FTSE All-World ETF, tracks thousands of global companies. Very low fee of 0.22% per year. Available on most UK ISA platforms. iShares Core MSCI World. Similar global coverage. Fee of 0.2%. Also widely available. You do not need to choose the perfect fund. You need to choose a low-cost global index fund and start. Time in the market beats timing the market every single time. Opening a stocks and shares ISA takes less than 15 minutes. Opening a stocks and shares ISA takes less than 15 minutes. Here is exactly how to do it, step by step. 1. Choose a platform. I use and recommend two platforms for UK beginners: Trading 212 and Vanguard UK. Both are FCA regulated. Both offer low-cost index fund ISAs, and both are straightforward to use. Links in the description. 2. Create an account. Download the app or go to the website. You will need your national insurance number, a form of ID such as a passport or driving license, and your bank details. The verification process usually takes between 1 and 24 hours. 3. Select Stocks and Shares ISA. Once your account is verified, select Open ISA or Stocks and Shares ISA from the account options. 4. Choose your fund. Search for Vanguard FTSE All World or iShares MSCI World. Both are available on Trading 212 and Vanguard's own platform. 5. Invest your first amount. You can start with as little as £1 on Trading 212. There is no minimum monthly commitment. Invest what you can, even £25 is a start. 6. Set up a regular monthly investment. This is the most important step. Set up an automatic monthly contribution, even £50, on the same day as your salary arrives. This is investing on autopilot. The entire process, from downloading the app to making your first investment, takes between 10 and 20 minutes. The hardest part is starting. Once you have started, compound growth does the work for you. 3 common Your action plan. Here is your action plan. Everything you need to do this week to open your first stocks and shares ISA. Today, make sure your emergency fund is in place, at least 1 to 3 months of expenses in an easy access savings account. Today, download Trading 212 or go to vanguard.co.uk. Use the links in the description and start the account opening process. This week, complete verification and open your stocks and shares ISA. This week, make your first investment, even £25, into a global index fund. Vanguard FTSE All World or iShares MSCI World. This month, set up a monthly automatic investment on payday. Even £50 a month, invested consistently, builds significant wealth over 10 to 15 years. An important reminder, the current tax year ends on the 5th of April 2026. If you have unused ISA allowance this year, use it before that date. Unused allowance cannot be rolled over. To summarize everything we covered today, a stocks and shares ISA is a tax-free investment account. All gains and income inside it are protected from UK tax. You can invest up to £20,000 per tax year. This year's deadline is the 5th of April 2026. For beginners, a global index fund such as Vanguard FTSE All World is the simplest and most effective starting point. Open your ISA on Trading 212 or Vanguard UK. Both are FCA regulated and beginner friendly. Start with what you can afford, even £25, and set up a monthly automatic contribution. Invest for the long term, 5 years minimum, and avoid checking daily. The 3 most important words in investing are start, stay, and repeat. Start investing. Stay invested. Repeat every month. If this video helped you understand ISAs for the first time, please subscribe. I publish a new UK personal finance video every single week, all built around real salaries, real numbers, and strategies that actually work. I have also linked Trading 212 and Vanguard in the description, along with the free UK budget spreadsheet. Leave a comment below with one question about ISAs, or tell me how much you're planning to invest this tax year. Thank you for watching. I will see you next week.